What's up everyone, Ross here from Warrior Trading. So in this video, I want to answer that question for you of how much money do I use to day trade? This last week has been a terrific week. I've had some really big green days. And so the question has started to pop up again of, well, when you make $3,000, $4,000 or $10,000, how much money are you using on those trades in order to make that money? And I would also say that the answer to this question is different than the answer to the question of how much money do you need to day trade? Because the reality is you can, if you want to, day trade with as little as $500. I did it in January of 2017. I funded an account with $583 and I turned it into $100,000 in less than 45 days. Then I did it again in December of 2019, just this past December. I funded an account with $520 and I turned it into $53,000 by the end of the month. So those happened to be really good hot streaks. Both the times that I funded the account, the market was really hot and I did really well. But you can open an account with as little as $500. The problem with a $500 account is that generally on these last two challenges, my first day with 500 has been anywhere from $100 to $150 of profit. And that's been on, one really good trade. In my regular size account, which I am trading with right now, that same trade would yield me probably closer to, realistically, if it was a $150 winner in a $500 account, it would probably be a $1,500 winner in a $5,000 account, and it would be like a $15,000 winner in a $50,000 account. So it would be a much bigger winner. So it doesn't make sense for me to trade with a $500 account every day. Even though I've proven you can do it, I use a larger account. So in general, when I take my first position on a stock, I'm buying 2,000 shares. And that's true pretty much for any stock between $5 and $10. So 2,000 shares of a $5 stock, 1,000 shares will be $5,000. 2,000 shares is $10,000. So that means with 2,000 shares, $5 stock, I've put $10,000 of my money into the trade. My goal generally would be a 10% gain. So if the stock squeezes up from 5 to 525, that's good, to 550 would be the target. I sell at 550 for a $500 winner with 1,000 shares, or a $1,000 winner with 2,000 shares. Now that's my starter position. When I'm looking to be a little more aggressive, I'll go up to 4,000 shares or 6,000 shares. My full size position generally is between 8,000 and 12,000 shares. It's the only times I really go into 12 to 15,000 shares is when I'm trading the cheaper stocks between $2 and $3 or $4. Occasionally I'll be more aggressive on stocks between 5 and 10, but not as often, because the problem is in that price range, we sometimes see stocks that will drop quickly, and so then the risk starts to get higher with larger share size. I would also remind you that when I take a trade and I put $10,000 into it and I make $1,000, some people would say, wow, you risked $10,000 to make $1,000? And that's not really true, because I bought something that was actually worth $10,000. I bought shares of this company. It would kind of like if you buy a house worth $200,000 with the plan of selling it for $220,000. That would be, a nice little profit, $20,000. You're not really risking the full $200,000 because you've now bought something of value. I mean, even if the house is in terrible shape and all of it's worth is tearing it down in the land, you still have something that you can salvage. So worst case scenario, you watch some of these HGTV shows. It's not that you couldn't take a loss on a house. It's not that you can't take a loss on a stock. You certainly can, but I rarely consider my max loss to be the full amount of money I have in the stock, because that's never happened to me, knock on wood, and it's just not really realistic. So the way I look at it is, if I'm buying a stock at $5 and I'm buying 1,000 shares, I've got $5,000 in the trade, but what I'm really risking is the difference between my entry price and the price where I'm going to bail out for a loss. So let's say that's $4.75, 25 cents per share times 1,000 shares, that would be $250. So I'm risking $250 to make $500. And now that makes a little more sense, right? You're risking $1 to make $2. Or with 2,000 shares, I'd be risking, in that case, 500 to make 1,000. That's the type of profit loss ratio that I look for, 2 to 1. And so generally on my trades this week, I've been trading mostly between 4,000 and 8,000 shares. Last week I was a little more aggressive on a few of my trades, and this week I told myself I wanted to kind of ease off the throttle and slow down. And what's funny is that as a result of slowing down, I've actually made more money, because rather than get in and get back out and get in and get back out, because I was trading with so much money and share size that I started getting nervous, I brought it down. I've been a little calmer, and I've been able to hold through a little bit of the chop and really let the position work, and in that way realize a bigger winner when they've ended up working. So my average, the average amount of money that I'm putting into a trade right now, 6,000 shares times $5 a share, that's $30,000. And again, with a $30,000 position, I might be risking 1,000 to make 2,000. I might be risking 500 to make 1,000, or whatever the case is. The money that I'm putting in is more of a vehicle for taking this quick trade where my risk is very calculated and my profit is well defined. Now, if you're trading in a cash account, the problem is that every time you take a trade, even just one trade, you now have to wait 2 days for that trade to settle. And so in your case, you can only trade once every other day. Now, I'm using a margin account, and that's what most day traders are going to use. And the accounts that I used, the brokers I used with my $500 small account challenge, they give you margin on a $500 account. And there's some links down in my description if you want to learn more about it. But the point is, with a margin account, as soon as you sell, you can trade with that money again. So if you have a $30,000 account, it's going to say 30,000 all day long. You buy a position, now you only have, X amount left. You sell it, and now you've got the $30,000 again. And so you can just keep trading that money again and again and again. Whether you have 300, 3,000, or 30,000, with a margin account, you can just keep trading. So I've been trading in a retirement account, and I've been able to grow the account nicely, which is great, because in that account, although I have settlement margin, I don't actually have any leverage. I don't have buying power. If I have 50,000, I can only buy $50,000 worth of stock. Whereas with regular accounts, you're going to have 4 times leverage, which means if you put in 25,000, you can actually buy $100,000 worth of stock. And with some of the other brokers out there, some offer up to 6 times leverage. So with $1,000 in your account, you can buy $6,000 worth of stock. Again, on the one hand, it's risky to use leverage. On the other hand, you're not going to hold the position, I hope, until the stock goes to zero. So what you're really risking is the difference between your entry and your max loss. So if you put $6,000 in, but you're really only risking $250, then from that perspective of risk to reward, you may be able to feel comfortable taking the trade. But again, everyone has their own risk tolerance. Mine has gone up as I've gained experience. And that's the result of having confidence. And that will happen for you as well. The most important thing is when you're getting started that you trade with small share size, number one, and before you ever trade with real money, that you trade in a simulator. Now, if you guys want to learn a little bit more about the process of getting started, opening your very first account, you want to learn more of the details between cash accounts and margin accounts, you want to learn a little bit more about the PDT rule, I'm going to put a link right down below in the description that's going to be a beginner's guide to getting started day trading. I know that there's a lot of folks that are looking into trading right now. It's it's an awesome career because you can literally do it from anywhere in the world. I'm at my house right now. We're under a stay-at-home, shelter-in-place order. So, I'm totally fine to do this, and I can trade from home and still do really well. As long as you've got an internet connection, you're good to go. So this is my little trading station here. And for the person who said, Ross, if you make so much money, why do you have this little apartment? This little apartment over here is this is more of like a work studio. My house is across the driveway, so we'll walk down there. Now, if you guys haven't already hit that subscribe button, Make sure you hit the subscribe button so you can see when I go live every morning to do my watch list, or when I upload new videos. So there's the regular house. This is just the small house across the driveway. All right, you guys, that's it for me. I hope you guys enjoyed this video. Make sure you check out that link down there below for the beginner's guide, and I will see you for the next episode. If you want to learn more about trading? Check out some of the links in my description, and if you have questions, ask them in the comments. I personally respond to every question posted on my channel. And don't forget to subscribe.